Hello and welcome back to the Lazy Money Game. In today's episode I will walk you through the news and what has happened to my portfolio within the week. So let's start where we left the last time by looking into the CV outbreak. Previously I have been using this map from WHO, which is updated roughly once a day or once every 24 hours, and we can see that these numbers are increasing quite rapidly. But thanks to one of my viewers, I actually found a better page to look into when it comes to the CV outbreak. So if we go directly to the source and look into this map from Johns Hopkins University, we will get a much more detailed overview, and it's updated much more frequently. So every time you press F5 to update your web page, you will actually receive the new numbers. And over here you have the sad column where you can actually see how many people have lost their life in the different countries. And it's actually even more detailed if we go to the states. Here you can see every single state, and by clicking on one of the states, for instance New York, you will see how many confirmed cases there are, how many deaths there are, how many who has recovered, and how many active cases they have. And this is also a really interesting figure showing how it is developing within mainland China and other locations. So much more data, much more sophisticated, which is just what you would like to know so you can track it in much more detail. So one thing we immediately notice is that Italy has passed China in the amount of people who have died from this outbreak. And what is actually even more sad is when you look to the number of confirmed cases, Italy only have around 53,000, but they have already lost close to 5,000 people, meaning that the death percentage is around 9%. So in the last article I shared last time, we saw that the death percentage was between 0.5% and 5%. But since Italy is struggling so much, that percentage had actually increased by 4 and is now all the way up to 9. That is really disturbing news. That calls for action in all other countries who is looking into this statistic, saying you need to act, and you need to act fast, and you need to act now. To illustrate why it is so important to act fast and to act now, I have of course made an Excel spreadsheet so we can look into some data that backs my point. So when we look to Italy, we can see how the number of dead people has increased quite rapidly. In the beginning it goes rather slow, and then it starts to really take off. This is where people need to understand that you can't think linearly, you have to think exponentially. And so far, unfortunately, Italy haven't touched yet. Every single day this number just goes up and up. This is really depressing. But what is evenly concerning is, if you look to the UK, they are on the exact same path as Italy, just 14 days behind. You can see these numbers, there is an exact match as of yesterday to the amount of people who is dying to this. So one thing that they should ask themselves in UK is, are we taking some initiatives which are drastically better than what they did in Italy? Because otherwise 2 weeks from now we are the ones with this number. Next, let's look at the United States and see how they are comparing against Italy. So we start by noticing that they are 1 week behind, and we can see that their numbers are also increasing, but we also note that they are not increasing as much as they are currently doing in Italy. So far they are doing significantly better. I really hope that they have learned the lesson from Italy, so this will be the pattern going forward. One thing that I'm really concerned about is the healthcare system in the United States, because it's much more fragmented than it is in Italy. So since I'm living in Denmark, I have of course also decided to make a tab specifically for Denmark. However, I have made this a bit differently. I started registering on the people that we have in intensive care as of 17th of March. and then I have been updated that number as we get it from the government every single day around 12. So, as of today, we have 46 people in intensive care. The reason why I've chosen to go with this number is because we're actually lacking test kits in Denmark, so we are not testing the doctors and we're not testing all the people with the symptoms. So I think this number is much more reliant or can be trusted much more compared to how many people have actually been tested positive. And of course, there's also this thing about in Denmark we have around 1,000 respirators or hospital beds for people who would need intensive care. So that is the critical number. And the reason why I have decided to expand all the way out to the 15th of April, that is because that is where we have been told that we expect this to top, that hopefully that should be the peak of this coronavirus. And over here I have added the actual growth rate so we can see what it has been in reality. And here you have the different scenarios, and I really hope that we can stay at around these 10% in growth rate, because that means that we will stay clear and there will be a bed for everyone who would need it. But if we just go to a growth rate of 20%, then we will actually run out of hospital beds. So I have been using these numbers quite frequently whenever I have tried to convince someone why it is so critical that we follow the instructions from the government and limit our exposure to other people. Because the difference from 20% growth rate to 10% growth rate is quite critical. Because if we are just at 20%, we will run out of hospital beds. So the only thing that people really need to do is limit their exposure to other people and keep a good hygiene. And I think that is a small price to pay compared to the life that you will have to pay if we don't do that. The numbers really speak for themselves. Let's take a look at the financial news from the United States and from Europe. I mean, this is really extraordinary times, and extraordinary times calls for extraordinary actions. I have just tried to highlight 3 of the top news from within the week, because there is so many things going on currently. So if we start by looking at number 1. Last Sunday, the Fed announced that it would cut the interest rate to around 0%. That was the second rate cut within 12 days. And at the same time, they said that they would secure the liquidity in the market by buying government bonds for around $700 billion over the next month. But just this week alone, they have spent around half that amount. And the rates on the government bonds are still dropping. So despite the fact that they have spent around $350 billion, the rate is still going down. One question that you need to ask yourself at this point is, are they prepared to buy even more than the 700 in case this is not enough? So this in some way leads to the next news. Will we see helicopter money? And if you are not familiar with the term helicopter money, I will try and explain it. So in 1969, Milton Friedman, a Nobel Prize winner of economics, tried to explain the concept of a helicopter flying over the population and dropping money. But what it means in reality is that the government will put money directly into every person's account in order to try and boost the economy. Because if the rate goes so low that there's no point of buying government bonds, every person will prefer to hold cash instead. And since the Fed is already trying to buy government bonds but the rate is still dropping, the next really drastic step would be to try and enforce this concept of helicopter money. Rumor has it that they are already sitting and discussing this in a meeting, and perhaps we will see some news tomorrow morning. Whether or not we are going to see helicopter money is currently very uncertain, even though Trump has said that it is a possibility. One thing that seems pretty reasonable to assume at this point in time is that we will see some unusual tools from the financial toolbox being put into place. So there will be very large helping packages for the companies and from the consumers, because this is really extraordinary times which call for extraordinary actions. If we then turn to the news in Europe, Germany is announcing a crisis pack as large as 600 billion euros. They are willing to put up guarantees and doing share purchases in companies and do all sorts of different loan arrangements. So in essence, this seems to be almost the same as they did under the financial crisis in 2008 and 2009. They are actually willing to leave this Vase Null, meaning having negative numbers on the government budget. And this is really serious, because Germany have been holding on to having a positive government budget since the crisis. This is not something they are willing to leave if they have any other option. Now let's take a look at my portfolio and see what has happened within the week. So first of all, you notice that apparently I have some issues with my sheet. It's still loading, and it has been so the entire day. I have tried restarting and rebooting and every single option that I can think of. So unfortunately, you will not be able to see the pie chart because that is currently not loading. And I can't switch sheets and go and show you the dividends tab either. But what you can see here on the front page is I am severely down. I have again lost around $10,000 within just a week. And now I actually have companies which are down more than 70%. That's really severe. But I mean, it makes sense that cruise line ships currently is bleeding. Who wants to go on a cruise as long as this situation is currently going on? But despite the fact that I can't show the dividends, I will still talk about it. Because on Monday I received a little less than $6 from Delta Airlines and $47 from 3M, $58 from Prudential Financials. Then on Tuesday, a little less than $23 from Carnival Corporations and a little less than $10 from International Paper. So in total $144, which is actually pretty good, I think. But this is extraordinary market circumstances. So I would be really surprised if some of my companies are not slashing their dividend completely. And I can verify that quite quickly, since I received this email on my Seeking Alpha saying that Macy is going to suspend their quarterly dividend after they have paid out the next dividend here the 1st of April. And then you are left with the tough question. Should you sell Macy's or should you keep them, despite the fact that they are down almost 65%, because now they are slashing the dividend. This is a tough situation where you really need to consider, do I believe in this company? Do I think that they will be able to stay relevant in the future? Is this just a short-term thing that is affecting them? Or should I get rid of them here and now? So it is really a tough choice. Do I want to sell it or do I want to keep it? Currently I would say that this is really extraordinary market conditions, and I think the only reasonable thing Macy can do is actually to slash the dividend in order to protect the company and make it possible for them to survive. Since they had to close all their stores, they were forced to close all their stores. So they're not making any money, hence they shouldn't pay out anything. So to sum this up, I really think this is extraordinary market conditions And I wouldn't be surprised to receive many more emails like the one that I received from Macy's. Because if your company is forced to shut down, then the only sensible thing you can do is to try and preserve as much cash as you can in order to survive, despite the fact that all the central banks and all the governments are going out and giving you all these loans. No one knows how long this situation will last, and until you are allowed to open your business, you just need to bleed the capital, paying out all the expenses. So do whatever it takes in order to survive here. And honestly, I wouldn't be surprised to see my portfolio drop between 10 and 30% more, depending on how long this will last. So a fair question to ask at this point is, have I reinvested my dividends? And that is quite easy for me to answer. Currently, I haven't done any investment within the week. I'm still trying to do dollar cost averaging, but I'm waiting a little longer and being a little more patient than what I have previously been, since I want to have more data from the United States that indicates that we are closer to a bottom. Because I actually think it's quite possible to see even further drops from this point on. So that pretty much sums it up for this week's episode of the Lazy Money Game. This is truly extraordinary times on the financial market. So remember to like and subscribe, and until I see you next time, bye!